So the thing about equity marketing and the difference between that and MLS is all these platforms are kind of like a dating site. MLS is like a dating site. Realestateexchange.com is like a dating site, and so is the National Council of Exchangers. And what I mean by that is that we all on our properties, we make a profile, and that profile tells us a lot of things about that property, and it's always about the property. And we always say things like, especially in residential sales, is wonderful, beautiful house, make it your home, make it your own. And so we kind of build up an image in our head of what that's all about. And that's fine to do that. But we want to know about the property. And just as importantly, we want to know about the owner of the property and what they're trying to do. And so we talk about motivations. And motivations, the attorneys tell us that they don't want us talking about the seller's motivation because it might give a buyer an advantage. Well, that's just not true all the time. Sometimes it may be true, but you can talk about the seller all you want to, as long as you have the seller's permission on what you are talking about. So if the seller has a motivation that the reason they're selling is they're getting divorced, you can say that. And you can talk about that because the seller has agreed for you to do that. And sometimes I will even get the seller to sign a statement that will say what we can share with the public about the motivations. Why are you selling? Do you need to sell? Are you in debt? Are you behind on your house payments? Are you in foreclosure? A lot of that stuff's public record. But still, it's best to know and for the seller to know what you're going to say and speak about when you're trying to market their properties. And so the MLS dating site gives things like wonderful, good house, great bones, built in '94, all the things you would want to know about a house, but nothing about the seller. And I deal in investment real estate a lot. And so it's very hard to get some of the things from the listing agent that would allow me to structure a better deal and a better contract if I knew something about the seller. And the reason we want to know about the seller is we want to be able to help the seller and help the buyer. Not to take advantage of anybody, but we want to help them out, and we can do that if we know more about them. So Ed is joining us, and I'm going to put Ed up into the broadcast, and we'll see how this goes. So there's your countdown, Ed. Oh, there you are, Ed. Can you hear me?
I'm very nervous. I was hoping to pop up on my desktop, but apparently things did not connect. But it's great to see you. You look great.
Yeah, it's great to see you too. I'm glad you could make it in. Well, Ed, I was just talking about was equity marketing, and I was comparing that equity marketing to what we do at NCE and versus MLS. And I was comparing realestate.com, our MLS system, and the National Council of Exchangers to dating sites. You know, you build a profile and you try to sell the property, and the profile may not be exactly what you had in your head because of how it was portrayed. And so the thing that the National Council of Exchangers does that's a little different is that we counsel the seller, we counsel the buyer, and we try to find out everything we can to help them out, and we get permission to share that information with the seller, about the seller. And so we can craft a better deal and make something actually work. And so that was what we was talking about. So what are your ideas on equity marketing and how we work?
Well, it's very much like you just explained, Chuck. The major difference being the fact that I guess from a practical standpoint, we ask the client many more questions than basically the average broker asks their client. I had the opportunity a couple of weeks ago to meet with a major commercial brokerage here in Los Angeles. And before I met with their CEO, I went through on the internet approximately 5 or 6 dozen listings that their brokers had for sale. And when I met with their CEO, I mentioned to him that there was not one listing that had any information whatsoever about the client himself, about the owner himself. And so what I did was just prepare a list, a very short list of questions, if you will, that I suggested that the CEO have his people ask their clients. Simple questions such as, what will you be doing with the cash that results from this transaction? Will you be using 1031 exchange in order to defer your capital gains tax? If you are going to use 1031 and you are going to buy another property, can you give us some idea of what that property might look like? And another additional question, which is, you've sold this property for, let us say, $1 million. Is it possible that you can add some additional cash that you might have on hand to that $1 million and acquire a larger property? And what type of property are you looking for? Now, if a broker simply places the answers to those questions in the standard, what I guess they call the remarks section of every listing, I told the CEO that I expected that the listings that his people had outstanding would receive a tremendous increase or influx in responses, due primarily to the fact that the people who were checking on those listings and seeing what that person was interested in investing next might have properties, might have assets that that person is going to be looking for. And therefore, even though the people who are checking out those listings as they jump on the internet, and let's say they see a triple net lease, and so they click on it and they get the standard information about the size, the rents, the cap rate, all those things that are in every listing that we've ever seen. They obtain that additional information, which is the things that this person is going to do next. And therefore, even if that person who responds to this listing and has no interest whatsoever in that listing, he may know, or there may be a broker down the hall who has the exact asset that this person is going to be looking for after they do sell this asset. And it just creates a tremendous amount of, I think, communication between people who are responding to those listings and people who basically are looking at more than just the details of the asset itself.
I think those are some good questions, and I think that we all have to ask questions. And years ago, when I was much younger, I used to kind of get embarrassed about asking a seller or a buyer, what are you going to do with the cash, or how much money do you have, or how are you going to spend it? Are you going to buy another property? It always felt like I was intruding and things I shouldn't be. And I always thought, well, they just think I'm trying to get another commission, but it's not true at all, because just what you said, you're trying to establish a basis of trying to help these people invest in things. You might come across something that fits that extra cash need, or they're going to do a 1031 and they got to spend all the money. So you might need something else to bring that up to what they have to spend. So asking questions is so key. And what I see in the MLS a lot of time is just what you said. We give the basics. We tell people about the property, and it's very hard for the selling broker on the other side to craft a deal without knowing some information. If I could go to the additional provisions and say, oh, they're interested in land, they're interested in houses, they're interested in income property.
Right.
I've got something that they might want, then I can structure a better deal. But the response I get a lot of times is just, well, give us what you want to give and we'll look at it. So I put a little caption up there on the screen, a little picture that says this guy's he's got land, but he has no cash. And you know, that is so true, that a lot of people have a lot of assets that has equity, and we don't know about it because we don't ask the question.
I totally agree with you, Chuck. And again, as we both know, it's one thing to close escrow, if you will, on a property. It's another thing to meet that what can be a difficult and challenging 45-day deadline in order to identify the next property that you're going to acquire. Because unless, as we both know, you meet that deadline of identifying it, you simply will lose the ability to defer those taxes. So the information about the next property can be very, very important, in the sense that as you help your client sell this property, who indicates to you that he is going to be using 1031, you most of the time run a parallel challenge in scrambling to find the next property, so that next property is identified even before possibly you close escrow, so that the identification period of 45 days will not sneak up on you and force you to buy something that you may not wish to buy, but that you feel you have to in order to shelter those deferred taxes that you just don't want to pay.
That's so true. I mean, you can start that identification process the minute you take the listing. You don't have to wait until you get an offer. You can find things out there that from your counseling with your client, you can find property that you suspect or know that they would probably take. And so you can start that process way before you get the listing or you get the contract for purchase.
Yes.
And then that 45 days can go by so quickly, and then all of a sudden you're under the gun. And
I know it.
I think they call that parking the money. You know, you buy something you don't want, so you don't have to pay the tax, and then you got to put it right back on the market and go through the process again, or pay the tax.
Right.
And so that can get really stressful when you get to the end of that 45 days, because there is no extensions on that. It's done.
I know it. I think another question that many people hesitate, if you will, to ask their clients is, might there be another asset that you own that you would add to this transaction in order to make a bigger transaction if someone is looking for a bigger asset to acquire? And as we both know, as we look at our marketing books at our National Council of Exchangers meetings, there's a section down below that is indicated can add. And not only is there listed cash that you can add, but also many, many times there might be 3 or 4 or 5 assets that this person would agree to add to this property that is for sale that could help him close a transaction. And in fact, there might not even be an asset itself that can add, could be expertise of some kind. He might be a developer, he might be a manager, and therefore could add management to this very property that he is selling, assuming for the moment it might be an office building. To know as a purchaser that not only have you acquired that asset, but you've acquired management that knows the building, that knows the tenants, that knows the town fathers and who to contact, can be tremendously valuable.
That's really good because, I mean, when you go to these marketing sessions, the can ads are so important because a lot of real estate brokers think that I've got a $500,000 piece of property, I need to acquire a $500,000 piece. But if you can't, you need to be prepared to go up in value, and that's what a can ad does, or you can go straight for the can ad and not the property that's pitched. But yes, you're very correct. The can ads are so important. And in fact, that's the sweetener in the deal a lot of times because it will actually help you structure a better deal, like a can ad in cash. And in fact, a can ad can be cash or notes or paper or anything like that. So yeah, that's really good.
Absolutely. I think the can ad subject is a subject that most brokers are not familiar with, and therefore I have seen instances at our meetings where someone might be looking, let us say, for self-storage, and they go to the index in the front of our marketing book and go down the list of things and might see only 2 self-storage projects that are for sale. And I think those who are not experienced at these meetings might sit back and be disappointed and follow up on those 2 projects. But people who have attended our meetings know that by looking at the index, they've only covered a fraction of the possible assets that are being offered for sale. And therefore, what they will do is go through page by page the various assets that are for sale to see if there might be someone who will add a self-storage project to the land or to the triple net or to the other project that actually is for sale on that sheet. So that, as you inferred a moment ago, you might approach that person and say, listen, your land that you have for sale for $500,000 and the self-storage facility that you will add for a value of $1 million, I will buy both of those if I have to in order to get to the self-storage facility, and then I'll simply lay off or resell the land myself. And that way you can find opportunities that might not be obvious by looking in the index, but are those secret hidden assets, if you will, way down there at the bottom of the page in the can ad section.
I think that is so important because even in my business in real estate and the general MLS, I always ask the buyer or the seller, what other kind of assets do you have? Because you just never know what they got. I mean, if you got a $300,000 house and I've got a $50,000 lot and $250,000 in cash, it would make a lot of sense if you would say, wow, you know, I could get that 250 cash if I could, and I'll take that lot. I don't want it, but I'll take it. And then I'll just do what you said, lay it off and add it to another transaction or get rid of it. But
Absolutely. Absolutely. Yeah. I think someone that has a difficult asset for sale, something with a negative cash flow, for instance, that might be listed for 6 months, 12 months, 18 months, and they just can't get rid of it, may, after being counseled by their broker, agree to add an asset that they had not counted on adding, but which will make the combination of those two very sellable. Maybe a triple net, maybe something that's a real prime property that everyone is looking for. Someone out there may be willing to buy this negative cash flow if it's packaged with this triple net or other asset.
That's right. I mean, you just never know what people have as assets until you ask them, or what they can do. I mean, if you just give them the idea of creating a note, or maybe they are carrying a piece of paper on some sale they did years ago that's worth $300,000, and you could add that to a deal. You just have to ask the questions and ask them in a good way so that you don't offend people, or so they don't just turn you down flat.
Right.
And what I mean, go ahead.
No, I was just going to say that I think it's a necessary part of every broker's process when he sits down with that client for maybe the first or second time, to drive home the fact that the more answers to the more questions he can get from his client, the more ways he may be able to help that client. And therefore, it isn't a case of probing or of getting too personal. It's a case of finding the most ways you can structure a deal for that client, because without this additional knowledge, you just simply have to confine your marketing to a very narrow band, which is the band, quite frankly, that 90% of commercial brokers have, which is, I have an asset. These are the statistics on the asset. Do you want it or don't you want it? And that's not much of a broad opportunity to find ways to creatively move that property for your client. So I think, as hard as sometimes it is when you're dealing with someone who's very powerful, someone with a heavy net worth, someone who is highly respected in the community, you have to drive home the fact that if he doesn't or she doesn't answer these questions, which are critical questions, you simply are going to have to limit the opportunities that you present to them.
Yeah, I think that's true. It's our MLS is a very narrow structure, and just like you said, it just deals with the facts. But the other things that we have in our toolbox is asking these questions and asking them in the correct way. So just like you said, if you don't know or they don't know, then you cannot structure a deal or find the deal that might fit their situation.
Right.
Because all these folks, what we have been trained for the last 20 years is that you go to the bank and you get the money and you bring it and close the house or building, and I will take the money and go buy something else. And that's such a narrow process. Yes. That we tend not to even ask the questions that might broaden the seller or the buyer's perspective.
Right.
And so that gets so, I mean, I'm a deal junkie. I like to trade and buy and sell and go to yard sales, and you can see how this trading works. Yeah. I'll give you an example. I asked this lady if they had any assets, and she said, well, why do you want to know? And I said, well, so I can help you structure a better deal. And I said, would you exchange? And she turned me down flat. And I said, uh-oh. And so I restructured the deal And I gave her the scenario of just what I did earlier in this broadcast, was that if I had a house or you had a house and I had 250 cash and I had a lot, would you do that? Oh yeah, I'd do that in a heartbeat. I said, would you take 200,000 cash and 100,000 and a promissory note that's well seasoned? And she said, yes, I would do that. So our toolbox is about asking the right questions in the right way. Because I guarantee you that most people will do what we say is a trade or an exchange on some level. And it may not be the big fancy 1031 that we think about. It just may be, I'll take your lot if I can get the rest in cash.
Right. I heard a funny, an interesting quote recently. I can't remember where it was, but when we talk about the different tools that we might be able to use, someone I recall said, if you only have a hammer, everything else is going to look like a nail. and therefore, again, you only have one way of proceeding, which is to slam something with that hammer. Whereas if you have pliers and you have a screwdriver and you have a saw and you have these other things, you can proceed along very different ways.
And I think that's so true about real estate, and that's so true about the profile that we build on the MLS or the NCE website, is that we put enough information in there that we want to make people ask questions. And of course, as a broker that has never gone to these type of meetings, you don't know what questions to ask if you're just in the general for sale market. So
right.
It's tough.
Well, I think too, it's kind of interesting. I was thinking the other day that it would be interesting for someone to write a book that basically would be something along these lines. And that is questions you should ask your client and why you should ask them. Because I think people with limited experience who might ask the very same 10 questions are asking them for different reasons. Classic example might be, I think you and I have both seen at the National Council of Exchange meetings, people who would stand up at the podium, make a presentation on a excellent property that has excellent returns, and someone in the audience raises their hand and says, why are you selling this? Why in the world? It has a 10 cap, it's solid as a rock, it has growth potential, why are you selling it? And the answer is, I'm selling it because I have to sell it. Not because I want to, but because I have to. And I think if two brokers are sitting side by side and one does not have the background of creative equity marketing and the other one does, I think immediately two different thoughts come into their head. The first person, who doesn't have the benefit of the equity marketing, immediately says, I've really got someone who's ultra incented to buy their property, and I think I can take this thing at a real big discount. And what I see is something I'm always looking for, which is a person under pressure who is forced, if you will, to sell that property because he has maybe a near-term cash obligation. The other person, on the other hand, who might have been to meetings, have been to our conferences, have been to our education, thinks a little more broadly and says, this person looks like they want to keep this. It looks like there's a tremendous future for this property. And you raise your hand and you ask the person at the podium, will you consider a discounted sale and buyback on this property? Meaning that, assuming it's $1 million property, will you sell it to me for $500,000 if I give you an option to buy it back after you've been through your financial troubles in a year or so for $600,000? That way, basically, you preserve a vested interest in that asset. And I, next to this other person, am offering him something which is much, much greater than simply a cash discount on that property. I am making, in that particular example, a 20% return if the option is a 1-year option. And I assist that owner in a way that the other person simply can't assist him. And so I think that not only must you write that list of questions to ask, but also the why you're asking it, because the stories and the structures are generated really out of the whys as much as they are the actual questions.
Yes, I agree. And how you ask it will determine the response you're going to get. And back to your example there that you did, that's what we try to teach at the NCE level, is that you try to help that person and not take advantage of them. The one on the left that says, hey, I'll buy your property at a deep discount, because they're thinking only about themselves. Where you, on the other hand, said, I will buy this property. I'm going to make 20%, and I will give you the opportunity to buy it back in a year or 5 years. And that way you preserve their equity and you solve their financial problem and allow them to pay off that existing debt and keep that 10 cap for themselves.
Right.
And so, that's a tremendous difference, because you ask the right questions and you solve the problem. A lot of times just selling the property is not solving the problem.
Yep.
So,
have we, I'm curious, have we attracted any other people to the broadcast at all during the time you've been on, Chuck?
No, nobody yet. No, I sent an invitation out to a lot of people, and Kara Libster, she shared the information on her website,
Yes,
on her Facebook page.
Right.
And so it's gone out there, but it could be that 3:30 in the afternoon Mountain Time, 2:30 your time is maybe not a good time of the day.
Right.
But
right.
We got a tremendous expert on the show like yourself, so I think they're missing out there.
Well, I guess at this point too, if someone does watch this after the presentation is over, we can, encourage them to contact you to see if we might set up a future broadcast with their particular challenges or problems or opportunities, which you and I would love to discuss.
Yeah, I think that's good. You can do it in a broadcast like this, or we can do it on another platform and just help people on how to structure deals and give them ideas and things that they can take away from something like this. To me, it's a tremendous thing, because every single property has probably got some sort of problem that we could use a little bit of advice on.
Sure, I agree.
I know I've got a property right now in Ouray, Colorado. We would like to trade that thing, and it's a difficult property, and we have not been able to do it. We'd trade it for land, we'd trade it for hunting land, we'd trade it for buildings or houses, or, so I've used every tool in my toolbox, and probably not using them quite correctly.
What is the value of the property?
Well, we had the value could be fluctuating a little bit. We had an MAI appraisal of $535,000, but it will not cash flow at the market rent that we can get.
Right. And
it's in a tourist town, which is probably the highest traveled tourist town in Colorado, and that's Ouray, Colorado, close to Telluride. but it's, that town fills up in the summer and goes very quiet in the winter. And
Right.
so that property, most people want to rent it for 6 months during the tourist season, then close the doors.
Right.
And of course, we have debt on it. And so when you've got debt, your payment goes 12 months out of the year, but your income comes in not 12 months most of the time. However, this week I did lease one of the units on a 1-year basis right now. So
I see. Is it a small apartment complex or?
no, it's a 3-unit commercial building.
Oh, okay. Okay.
Yeah, 3 little retail units. Could be
I see.
coffee shop or sandwich or gifts. Or right now we've got a tour guide company in there, and they do Jeep tours all over the Rocky Mountains. So
I see.
they'll be good in there for a year.
Right.
So, I mean, those are kind of hard properties. And so, if people are watching on Facebook after the broadcast and they watch this thing over, maybe they will see you or me and they'll see this property and they will ask about it. And you just never know where things are going to go.
Well, again, I think, as we've said before, they can contact you at your email address or your Facebook address. And obviously, I'm at edberlinski@gmail.com, and therefore they could contact me either by email or Facebook, and we could set up something. We'd be eager to set up something that we feel might be a benefit to someone who's got a stale listing or has a hard to sell property, to give them some ideas.
Yes, I think that is really good. And I would think a lot of brokers would take advantage of that. And not only brokers, but buyers and sellers also.
Absolutely.
I mean,
Absolutely.
you and I are not going to try to take somebody's client. So if a broker's got questions or their client's got questions, set up a meeting and we can do that real easily.
Right. And I think it's important to mention as well that the conference that we might be able to put together would certainly not have to be something which is public, which is on Facebook that everyone in the world sees, and therefore they could have the confidence that the only ones that they're telling this information to is yourself and myself in a very confidential way.
I think that's a real important point, because we can do this very thing on a program called Zoom. And you and I have met once on a Zoom platform, but I have a paid Zoom account. It's recorded and it's very private. And so nobody can see it except the people that are in the meeting. And so, yes, we could do a lot of good things right there to help buyers, sellers. It doesn't have to be that. It could be CPAs or attorneys or bankers or people that's got problems of any real estate related type. I think we could probably help them out on that
Absolutely.
Zoom platform.
Right. Even someone that might have a note that wants to do something with the note.
That's right, because people on this broadcast don't know, but Ed is a expert with notes and private money lending. And so you might be able to create a note or buy a note or sell a note. Is that correct, Ed?
Sure, absolutely. And you bring up a subject which is so elementary, so simple, but in some cases is hard for people to contemplate, and that is the creation of a note on a property that you own. Maybe you could run through that very briefly for people, because when you mention it at lunch to someone or in an informal conversation, the concept of actually creating a note against the property that you own just isn't something which is intuitively obvious, but it's the simplest thing in the world to do.
And it sounds like, why would I do that? And, all right, I will try to explain it in the way I explain it, and then we'll let you straighten out what I mess up.
I'm not sure I have to straighten anything out.
But here goes. Let's say that you own a piece of property, and let's see, how could I structure this? And you want to trade it for something I've got, and I say I don't want your property, but I would take a note that you created on that property. And so you're going to create a note against your property, and you're going to use that note to go buy something else. And you're going to structure the note that's going to be with the terms and conditions that I can live with and you can live with, because you're going to be making payments on your own note. Is that correct, Ed?
I think that's exactly right. And we have so many people, and this is not something which comes up rarely, but something which comes up commonly, which is people at our meetings might approach the podium, and their presentation is that basically they have a note to sell, a series of payments, and basically they're looking for cash for that series of payments. But the ability to get up to the podium and say, I will create a note for you, and depending upon the maturity date you're looking for, and the interest rate you're looking for, and the terms and conditions that you're looking for, you and I can sit down at a table and negotiate those, rather than have a note in my hand that already has been contracted to and has those terms and conditions in it and is therefore not flexible.
Right. And when that note is not flexible, you can use that note that's existing to go buy something else, but it's inflexible. You can't change the terms of it, whereas a note that you create against your own property to buy something else, you can structure the terms that suits both parties.
Exactly.
And so I think Blake Allen is probably also an expert at that. He does that all the time.
Does he?
Yeah, he buys and sells properties by creating notes.
I see. Well, as I look at my watch, actually, I have to sign off pretty soon, Chuck.
Well, Ed, tell us what you do with your private money lending so that people will know that.
You know, I'm just a private lender who basically lends money to people who have been fixing and flipping homes. I've been doing it for 22 years. It's a kind of a simple short-term solution for people who find opportunities out there and don't have the time, or don't have maybe the sophistication to approach a bank and wait 4 months, 4 weeks, 6 weeks, 8 weeks to obtain a loan from a bank, where I can close a transaction such as a simple purchase of a home in as short as 72 hours, if I have the information that I need.
I think that's very good. And my daughter also does some of this private money lending. But some of the things about that is this is for investment property.
That's
and
correct.
Of course, we don't do owner-occupied residential loans.
That is correct.
Dodd-Frank.
Yes, that's important.
We just do it for investments, like Ed said, flipping houses, remodeling houses, and helping people where they can't go to the bank or they don't have the time to go to the bank. And of course, Ed and everybody that has private money lending are going to be well secured. They're going to get a little bit higher interest rate, and it's going to be a shorter term on the loan.
Correct.
But it's an excellent, excellent way to do business when you're in the real estate business.
Well, Chuck, I look forward to seeing you in a couple weeks at the National Council of Exchangers meeting in Las Vegas. And if someone is watching this broadcast after we're done, let me just say that that person can contact the National Council of Exchangers on the internet, and they still have time to basically attend that meeting, which is going to be April 16th to 19th. And so therefore, I would encourage anyone who wants to differentiate themselves, separate themselves from the crowd, if you will, that they entertain the possibility of attending this meeting. And believe me, we both know, Chuck, we're there to help them. We're there to help them. If they're first-time attendees, we will sit with them and help them understand what goes on at these meetings.
That's correct. You'll get all the help that you can ever imagine that you could get, and people will love to have you come. And so I'll be there, and Ed'll be there, and we'll have a good meeting. Usually April is a very good meeting, and good food and good education too.
Right. Well, thank you very much, Chuck. It's great to talk to you, and it'll be interesting to see if how people respond, if you will, to this show of yours. I think it's wonderful.
Good. Yeah, thank you, Ed, and we'll do it again. I'm going to drop you down so you can go on about your life.
Thank you so much.
Thank you.
Bye, Chuck.
Okay, so that was Ed Berlinski. He's out of California. And of course, I'm in Colorado. And if you like this kind of a program and you want to learn about things and how we do things, the National Council of Exchangers, then send me an email at chuck@montrosecommercial.com. I thought I had it on my screen, but I can't find it in my agenda. So I'll probably put it in some other agenda. But yes, that's what we do. We're regular real estate brokers with extra tools in our toolbox. We're very good at exchanging and structuring deals and helping people with real estate problems or needs. And it doesn't have to be a problem. And so it's a fun way to do business. And you see on the screen, there's over 300 ways to buy and sell real estate. And that's a book put out by Bob Steele, and he is a legendary exchanger trader. He is really, really good, and that's a good book to have. You can find that on Amazon.com. And you see the other screenshot that I've got on the sign up on the screen that says, the seller only wants cash. And I hear that all the time. And so let me give you a little thing that I did with a realtor friend of mine. She's a real good friend of mine. And in our MLS system, we have a checkbox that says trade or exchange. And you can check that, and you can put a little notation beside it that says what they want, income or houses or land. And you can also write in additional provisions, and it can be the confidential, agent confidential additional provisions, what the seller or the buyer or the seller wants or needs or can do. And so the public does not see those confidential remarks. So I told her how we asked the question. If you ask any seller, almost any seller, when you're listing their property, and especially a house or a building, will you trade? They'll say no. But if you explain how the trade will work, how that we might get mostly cash, we might get cash and notes, we might get cash and a piece of land, we might move your debt off to something else and raise the stakes and go into a bigger property. We can do a 1031 exchange, or we can just do a simple trade. A trade which would involve cash and notes and land and other assets. So the things that you have in your toolbox can be a lot of things that will help the seller. And I think that's one of the primary roles of a real estate broker, is not to sell their house, but to solve the problem of the seller. The seller has a problem, or they wouldn't have listed their house or their building with you. They might need to sell to get a new job. They might be moving out of the state or out of the country. They might have depreciated all their property out over the last 30 years, and now they need a new basis. They need a new business location. And so how you structure the questions and ask them what they will do will open up a whole world of possibilities. And I think that if we just say, well, okay, we'll sell your house and go down to the bank and get the money and go buy another house. I think that's kind of a short-sighted way to do business and not helping the seller. Because I think that no matter how ridiculous the deal, and I do get some deals that would never work, but no matter what it looks like, I think our obligation is present that deal to the seller and let the seller tell you yes or no, or how or what they would do. And so another thing is if I present a deal to you, let's say that you have a house and I say, hey, I'll give you a house and a piece of land for your asset. And you say, no, I don't want your piece of land. Instead of just turning that down flat, say, no, my seller doesn't want that piece of land, but maybe we can get somebody else to take the piece of land, or maybe we can sell the piece of land before closing, or maybe the brokers can buy the piece of land. I mean, so look at every deal very carefully and don't turn it down. And so that is how that we try to help the seller. Now, at the National Council of Exchangers, which is this coming 21st, I think, I'll be down in Las Vegas for about 4 days. And the first day is a whole day of education. And the education this time is called Understanding Your Client. And we have a really good instructor that's going to teach us how to ask questions and how to listen to the client. And not only how to listen, but how to structure deals that will fit into what the client wants to do. So we get a really good day of education. And then on Tuesday, Wednesday, and Thursday, we have every morning we have roundtable discussions and where we talk about technology and talk about how to structure deals and how to find clients and how to help each other in the transaction process. And there's a lot of very knowledgeable people there, like Ed Berlinski, and he's a private money lender. And there's lawyers and CPAs and lenders are there. A lot of lenders and insurance people are there. And 1031 exchange people are there that run 1031, they're accommodators. So there's a lot of education, a lot of people there, and there's probably be 100 or so people there at that meeting. And you really get to meet people from all over the United States. So if you can come, I would encourage you to. And the website is nceexchangers.com. I wonder if I can type that on the board. And let's see, right on the screen, nceexchangers.com. So nceexchangers.com. And you can, whoops, I didn't put the com on the end of it, nceexchangers.com. And you can go there and sign up. And if it'll be your first time to attend, you will spend 1 day of education about equity marketing. And then you'll be called an equity marketing specialist, EMS, to go along with your real estate. And you can join the meetings and you can participate and you can present properties. It's a great place to present your seller's property. So I'm going to end the broadcast and thanks for watching. And Ed, it was sure great to see you. And we'll see you at the exchange meeting in a couple of weeks. So this is Chuck Trice, and we're going to end the broadcast. Thank you for watching.